Hello friend, my name is David Newby. I'm the author of the book, Why Didn't Anyone Teach Me This?, where I talk about how I went from growing up on welfare to semi-retiring at age 32. I want to talk to you now about a very well-known book by a fellow Christian author, Dave Ramsey, his book, The Total Money Makeover. And in the next minute or so, I want to show you how you can speed up and utilize the techniques that Dave Ramsey preaches easier and safer in your finances, okay? And you pay special attention to what I'm going to share with you in the next couple of minutes. This will be very, very valuable for you. At any time during this video, you can click on the link over to the right and get access to 20 videos and reports that I have for you, okay? Now I'm going to summarize, first of all, Dave Ramsey's book really quick. In his book, The Total Money Makeover, he basically talks about getting rid of credit, paying down debt in a very fast way. He calls it the debt snowball. And then after you've done those two things, his third step of the system is starting to invest and building up a nest egg so that your passive income from your nest egg can exceed your bills, at which point you're financially free. Well, I'm going to share with you really quickly now 2 ways that you can speed up what Dave teaches in the book, and you're not going to get this in the traditional realm of financial wisdom. The first thing is that when it comes to debt and credit, Dave talks about paying down your debt before you build up a 6-month survival account. When times are not doing well economically, like since things have been doing from mid-2008 up until early 2009, it's very, very important that you don't put your banker's interest or your debtor's interest above your own. And what I mean is, I think that it's very, very wise for you to get a home equity line of credit if you have good credit and you have equity in your house, or look to raise your limits with your credit card companies. And if you know a certain script to use with them, you can do that quite quickly. How that will benefit you is 2 ways. One, if God forbid you get laid off or hurt in the next couple of months, say due to a recession or just a cutback at your company, you have some emergency funds available to you that you can use to pay your bills with while you're looking for another job. So I'm not saying use that as a replacement for getting out of debt. This is something that you can do above and beyond what Dave teaches. Secondly, if you own a business or you're thinking about starting a business in the future, which a lot of Americans want to, then it's very important that you don't apply what Dave teaches about don't use credit in the personal realm, in the business realm. In the business realm, it's a lot of times it requires a lot of capital to start a business, and it's very smart for you to know how to build credit in the name of a business that doesn't show up in your personal credit. And if you have a $50,000 business venture, instead of using $50,000 of your personal savings or putting $50,000 on a personal credit card, it's much wiser and shrewder to raise that money in the name of the business where it won't affect your personal finances. So that's one example how you can apply what Dave teaches in a little bit of a smarter way, and if you're going to start a business, a much shrewder way to start a business or grow a business that you already have. Number 2 is when the third step Dave talks about building up your nest egg after you have your debt paid off. Dave strictly talks about mutual funds. And actually, when you click on the link to the right, in one of the videos that I'm going to give you absolutely free, I'm going to show you a technique where you can actually earn 10-12% a year, which are the kind of rates of returns that Dave recommends in the book. He recommends getting with a very, very good money manager and learning to make 11-12% a year in mutual funds. We saw in late 2008 and early 2009 how mutual funds can drop drastically in value. And I don't want you to be in the position where if you need to get access to some money, you're pulling your money out when the value of your nest egg has gone down drastically and you're locking in those losses. A much safer way to do the same thing that Dave's talking about in his book is to work with groups that invest in covered calls, meaning they'll buy stocks and then they buy the option or sell the option. I'm not going to get into all the technicalities of it now. The bottom line is they can make that same 11-12% a year in the stock market without the risk of the mutual funds. So you can get a lot of the same reward without the corresponding risk that you have in a mutual fund. I'm going to tell you a lot more about that when you get the videos to the right. I thank you for your time, You're at the right place at the right time right now. Click on the link to the right, learn how to get your free videos and your free report, and I look forward to helping you have your ultimate Total Money Makeover very soon. God bless.